Hello YouTubers, welcome to today's Yield Labs YouTube video. Please consider subscribing to our channel, hit the like button if you enjoy our content, and last but not least, don't forget that you can hit the bell icon to get notified when we release new videos for the latest and greatest crypto yield generation content.
All right, so welcome everybody to the second community call, Yield Labs community call. Thank you all for joining. We've got some great content today. We're doing a Terra ecosystem overview, and we have some bonus content as well from a couple of the panelists. So that's great. So I think let me just make sure this is moving. Yeah, first of all, we're going to do some introductions. Just let you know who we've got here and their background, etc. Then we're going to take a deep dive into the Terra ecosystem. We're going to do a Q&A session after that on the Terra ecosystem and any other questions you have. And then we're going to do a great after show. So those who don't watch the recording, you'll miss this one, or you do just watch the recording, you'll miss out on the after show where we'll do some kind of unfiltered Q&A and high value, but I get it that everybody can't join and people have time constraints. So the option is there to join if you want. And be live. If not, just watch the recording, and you're welcome to do either of those. And obviously anything we say today is not financial advice, and just kind of our opinions on kind of how we see, and should be just for entertainment content only. So I think let's do some introductions first. I'll do mine as we go through the slideshow. So who wants to go first? Toby, do you want to just introduce yourself?
Sure. For those of you who couldn't join us last week, my name's Toby Richmond. I am somebody who's been invested in the crypto space since like late 2016. I followed a lot of projects closely. Probably the most notable one being Celsius. We got in there very early, and obviously we followed the project with close beady eyes as best as possible to ensure that we were clued into everything that was going on in that space as much as we physically could be. I currently reside in the UK. My background pre-crypto was in oil and gas and telecommunications. That's how Kevin and I met, Kevin Bradford. And it's great to have you here, and some of you may recognize me as the current narrator of the Yield Labs YouTube videos. So thank you for your time in watching those. It means a lot, and if they're helpful and you have any feedback or comments on any of that, then please feel free to leave them in the comments tab, or send me a message, or get me on Twitter, or so on and so forth. And cool. Thank you for your time.
Yeah, thanks, Toby. Yeah, some of those videos have been really good. We've really enjoyed them. I think they've had great feedback, and we're basically just step by step trying to build this will kind of like plug in this presentation today into kind of, you know, some of those Q&A, some of those tutorials. So people can reference those in the presentation. Then you can go watch those after if you want to. You don't have to take everything in all at once on this presentation. Obviously, there will be a recording so you can watch it back. So we're just trying to build out educational content just to help people, just navigate around these ecosystems. So Kevin, you're new to this show on the live format. So do you want to introduce yourself?
Yeah, sure, with pleasure. So yeah, my name is Kevin. I'm originally from Switzerland, but I'm right now in Singapore. So it's about midnight here, which is the reason why I was not there 2 weeks ago, because the show, I believe, was 1 or 2 hours later, so I was sleeping. And so, yeah, part of the Yield Lab team, super excited to be here to build a great community. And so basically a bit about my background. So I built a couple of businesses in data analytics in the last 6 years. So basically, as soon as I got out of university, I started to build businesses, and then started to invest fairly early, trying to make the best of my time and basically the money and the cash that we were generating. And so I restarted the investing journey in the kind of normal world, where by reading books talking about the timeless principle of investing and how to build wealth. And in late 2018, joined the crypto crew, basically by realizing that I mean, first I was looking for a market that was completely depressed, which was the case for crypto. And second, after doing a deep dive, I just realized that you could take everything you would learn from the principles of traditional investing, basically, investing, DCA, long-term thinking, compounding, etc. And if you would apply the same principles to crypto, basically you would get the same but on steroids. So instead of needing 30 years to build wealth and kind of retire, you could do it in 2 to 3 to 5 to 10 years. And so it became a no-brainer, both in terms of potential capital gains and in terms of basically yield that was possible thanks to all these great yield opportunities that were created in the last 2 years. And so, yeah, pretty much a no-brainer. And actually, today we're talking about Terra, and I discovered this ecosystem a few months ago. Did just a few tweets, and then when I saw the reaction of the Terra community, I just realized this must be really interesting and crazy. And so, yeah, just looking at this ecosystem, then we just quickly realized that it was completely in line with all our kind of principles, which is building passive income. And so, as we'll see today with Kevin's great presentation, I mean, it's an incredible ecosystem with a mega potential and an actual stellar execution from the team behind it.
Yeah, thank you. And you were really early to identify this, and yeah, I think you covered that well. That's a really good introduction. Really nice to have you here, and you can join in with the slides, and we'll present them together. So, Steve next, and then we'll leave Plan C to the end because we have a bonus from Plan C, so we'll leave it to the end.
Yeah. Hi everyone. Steve Bradford, brother of Kevin's. Got a background of pretty much 100% telecoms in the last sort of 16, 17 years, predominantly with international wholesale voice traffic, working my way up from operations through to commercial, through to sales. But more recently, I'm working on PCI DSS, and I run a PCI DSS compliant platform, which basically enables customers to take payments with DTMF in a PCI compliant manner. So heavy telecoms background. Been in crypto for about 3-4 years, 2017, late 2017, Bitcoin, ETH, and started sort of with Celsius really in terms of yield. Got into Celsius, understood the CeFi play, and then moved into DeFi. I'm kind of addicted to yield really. Yeah, lots of different protocols to enable the yield generation these days, and obviously Terra being one of the more recent ones that we're sort of looking at. So yeah, looking forward to today's call, and sort of responsible for social outreach with Yield Labs. So any questions, give me a shout, and enjoy the show.
Oh, sorry, I was muted myself there. Thanks, Steve. So like Plan C, I'll give you, you can make an introduction and I'll stop sharing this and you can share your content. So thank you. And you're going to give the audience a nice bonus today. So thank you for doing that.
Yeah, no problem at all, Kevin. Let me just share my screen here, and then I'll do my intro here as well.
It's nice. Yeah, there's somebody else doing the presentation. This is really cool. I'm enjoying it.
Let me just, sorry guys, let me just open this up here. Yeah, so as far as a bit about myself and my background. So yeah, before crypto, yeah, what I was doing was I own a small business. I still do. So that's been what I've been mainly focused on the last 7 years. But yeah, like I've been in crypto for 4 years. So I joined, about 4 years ago. And I just have a passion for investing in general, like all types of investing, not just crypto, but yeah, just learning about investing in general and principles. I don't have a formal background in it. I just have like a never ending passion to learn and just keep growing and my knowledge base of investing. There's a lot of great minds in crypto and just interacting with them. I've been able to, between podcasts and just talking to other people, I've been able to pick up a good amount of information. But yeah, I definitely have a passion for crypto and then also for just passive income in general. So this ties in really well with Yield Labs, and I'm really enjoying being a part of this project because I just think that there's there's so much to investigate within this sector, and it's just like we're just at the very beginning of it. So I think like the guys that are here on these kind of calls, like you're getting in at the ground floor of what you're going to see over the next whatever 10 years. We're going to excuse me, we're going to see a tremendous amount of growth in this sector. So yeah, you're in the right spot. Passive income and the amount you can get in this space is unrivaled anywhere else. And so yeah, just kind of passionate about all these things combined. As far as the quick presentation here, I'm just going to do like 10 minutes and just a few quick slides. So the first one here, like everyone, I guess that's involved in crypto, everyone that's on this call, you guys are probably excited about seeing some positive price action over the last couple of weeks here. So just to show everyone what this is, so this specific chart here I'm showing you, this slide here, what it's showing is it's actually showing the cost basis of the network of all Bitcoins in circulation. So it's showing, it's based on volume. So at the bottom here, you can see like these are all the different price levels of when people have bought in. And what they've done is they do like basically 2% increments between each bar, but each one of these bars represents the amount of volume. You can see on the left here, the amount of volume basically at all the different price points. And so we can see like there's been pockets and zones where we've seen more cost basis entering in those areas, but this is going back to basically zero all the way up to the all-time high. So you can get an idea based on when you got in, whereabouts you are in this spectrum. I highlighted this right here. This is showing roughly where the current price is right now. So you can get an idea how many people bought before this price, and then how many people are underwater that bought after this price. So the two zones I highlighted, one is this area here. So this is between 36.5K and 39.5K. And there was a lot of buying in this area. We've also seen a lot of buying all the way down to 30K as well. But this area specifically, and we had a massive candle of buying at about 39.5K or 39K here. So to me, what this represents is that all of these people that bought in this zone, this area here, they're basically like, usually psychologically humans don't like to sell at a loss. So this is another way of looking at like support levels. Like we look at TA support levels, and this is another way of looking at on-chain basically volume-based TA support levels or resistance and support levels. And so this area here to me is a very strong support level for the price of Bitcoin. And we're well past that now, but you can see there hasn't been a lot of buying in this area. So because every time we go up, you have a group of people like buying between 55.5 and 57K. So this could be mild resistance up here. It's hard to know. Some of these people they'll finally be at break even might sell. But what we're seeing right now is we're seeing this zone. Now that we've passed through like 42K and we've got past this area, the 200-day moving average at 45K, but drop back down. There's a lot of people that bought in here that are not going to want to sell at a loss, so that's going to support the price. And we have an area here where not many people bought up until 55.5K. So to me, I'm just watching this. I'm just seeing, okay, like how is the overall network like relative to where we are? Like when did people buy in? So that's pretty much for this slide. You can kind of get an idea of just like the amount of volume at different price points. You guys probably remember we ran up very fast from like 10K all the way up to I guess like around 40K initially, or up to around this area initially. So there wasn't a lot of volume in here originally as well. But yeah, we're in an area of not a whole lot of volume. The next slide here, what this is showing to me. So what this is showing is it's the net realized profit and losses. So this is actual sellers. Are they selling at a profit or are they selling at a loss? So this is going back quite a ways, almost a year. And this line in the middle here is basically break even. So every single day you have buyers and sellers of Bitcoin. You have people selling at a loss. You have some people selling at a profit. But what this metric does is it takes the entire base of all sellers that single day, and it says as a net, did they sell at a loss or did they sell at a profit? And that gives you an idea of the entire network, what they're doing at each price level. So the line here is break even, like I said. So during a bull market, you don't typically see the price drop below this line. You can see, like, as we came up here, like this is going all the way back, and in the background here we have the price. This is the logarithmic price of Bitcoin. Right here is the line, like I mentioned, for break even. And you can see here we started at 10K about a year ago, came up here. We had some profit taking. You can see, like, green, like the further away from this line, the more people are selling at profit. You can see right here, this is the first run up. We had a very steep run up. This is 40K. We had quite a bit of selling, taking profit. You know, we came down. You can see, like, usually when we during a bull market, you go back to this line. It's kind of like a signal that, like, it's kind of the bottom of the correction. So you can see here, this was the bottom, and we came back to the line, ran up again, more profit taking at these two zones. Right here again, came down right at the line. That was a signal that, okay, probably it's the bottom. Went up again, more profit taking, came down again. So you can see, like, these all match the bottoming areas right here, here, we all match. So what was different about this last massive drop that led into the last few months.
That is a wrap on today's video, guys. Thank you for
downward price
tuning
action.
in. We hope the content
We
was
started to
useful in
have
helping you get a
capitulation,
better
right? So we
grasp
started
on
to
yield
see a
generation
lot
in
of
this
selling. We
space.
broke through this line.
Hop on over to
We
Twitter and
actually
follow
had
us at
billions and billions of dollars
@YieldLabs for
in
updates
these
and
few
more.
days here, and here, especially this area, where we saw straight up capitulation and massive selling at losses. So to me, what this represents is we've already been testing the strength of hands within the network. So the amount of people holding Bitcoin that are willing to sell at a loss. We've already had massive capitulation for months in this whole area right here. And you've noticed we've broken back above this. We had like, you guys remember this run up, right? This was a couple of weeks ago where we shot up from 29K all the way up to 40K. Now this recovery was based on a short squeeze. We had people shorting Bitcoin that got squeezed. So the price went up very quickly. What we had initially on that run up is we had a lot of profit taking. But what you'll notice now is we came back down. We actually already tested this line again and we bounced. So to me, that's signaling, you know, the strength of the bull market is back intact. All the capitulation is essentially gone. And even at the current price levels, even after this run up from 40 to 45K or whatever, 44K, we're not seeing a lot of profit taking. So to me, this is a really healthy sign. This shows me, like, okay, what could happen is, yeah, the price could drop, like, based on, say, some FUD or some bad news. We could see a price drop. But even if we see a price drop back to, say, 37K, just as a number, say the regulation or the bill that's going through right now is really negative for crypto, we see the price drop, you know, whatever, 5, 6, 7,000. I don't expect a lot of capitulation because I feel like a lot of the weak hands in the network have been shaken out over the last few months. This zone was a lot of selling at losses. So like I showed in the slide before, you know, we have a lot of support going back like 39K and lower. We have a ton of support between 36 and 39K on chain volume. And even if we do drop back from bad news, I feel like a lot of the capitulation is gone. So that's just what I'm kind of seeing with these two quick metrics. The very last thing I'll quickly go through is one more here. So this is something I've been following the last, like, week or so, or a little bit longer. This is just to do with Ethereum. So just I just wanted to quickly share this. You guys are probably aware of this as well, some people, but there's a massive short squeeze for Ethereum. And this is like a long-term overview of Ethereum. And it's just a quick few slides here. So you can see, like, this one represents the amount of Ethereum and smart contracts over the last year. And we're seeing like 100% growth in the amount of Bitcoin held. So like this, Ethereum held. So this is all Ethereum in circulation. We went from 12.5% roughly, or a little bit less, 12% or so, all the way up to around 25%. So we basically doubled the amount of Ethereum being used in smart contracts. And then over here, we have the amount of Ethereum locked up for staking for the contract where you have to put 32 ETH up. We've seen 6.5 million Ethereum locked in this. It's actually increased even since this slide, but we're seeing a continual amount locked up in staking. We're seeing a ton locked up in DeFi. And then what this all equates to a shrinking amount on exchanges, right? So over the last, this is blocking my thing here. Over the last year or so, we've seen a 30% decrease in the amount of Ethereum available on exchanges. You can see here the drop, right? The amount. So there's really only about 13% of the Ethereum circulating supply that's available on exchanges. It's actually less than Bitcoin. And so for many reasons, right? We have the EIP 1559 protocol that just came into place. It doesn't make Ethereum deflationary yet, but it has potential over the next year or so as things get rolled out to become slightly deflationary over time. So you add that in, and you add in the amount we're burning, plus all of this, the demand for ETH within smart contracts, NFTs, staking. Remember, this staking cannot be unlocked until ETH2 launches. Plus you have the DeFi, obviously. So to me, this is just like, I bought Ethereum over a week ago now, but like Ethereum is something that I was sleeping on for a very long time. And to me, it's something that's worth investigating as far as like a supply shock. I think the supply shock for ETH is equivalent to what we're going to see with Bitcoin over the coming years. But yeah, that's pretty much it for the presentation. Sorry if I went long. I try to keep it tight, but yeah, probably went a little long there.
Oh, good. So, yeah, so I think it's great that you put that together. Just if you could just unshare the screen, that'd be great. Like, I think it's great you put that together. There's a lot of people, before we kind of go into the Terra thing, that are kind of confused what's going on now, and we can save those questions to the end.
Can I just add something?
Sure, yeah,
just
add
for 10
something.
seconds. Yeah, so basically in crypto, the most important thing in terms of crypto investing is all about narratives. And so the ETH narrative now is just absolutely mega. So you just saw all these metrics, and you know about this EIP 1559 and about the merging in a couple of months. And so when you have all this stuff together, then there's this mega narrative building, especially in the macro world. So you have all the kind of billionaires and family offices buying into these narratives, and they're just seeing all these, NFT stuff that's happening, all these DeFi stuff, and they're just thinking, okay, what's the safest bet for that? Actually buying ETH. And so all of this stuff together creates an absolutely mega narrative that is probably even bigger than the Bitcoin one for the next 6 to 12 months, because it's something that the average Joe just can understand much better. Because to understand Bitcoin, you need to understand money and the problem with monetary policy and all that stuff. Whereas to understand Ethereum, you just need to basically, even people who don't understand anything about crypto, they understand how basically NFTs can change, life for artists and collectors, etc. And so just this, is just creating a mega narrative. And because the entire crypto game is about getting early into the narrative, this one is definitely a huge one.
Yeah, and this is another network which has its own narrative as well. Or as you say, it's all narrative driven. So yeah, it's really, that's a really good point. So if anyone's got any questions, put them in the Q&A if you don't want to verbalize them or speak. Some people are shy, we understand that. Put them in the Q&A. Try not to put them in the chat, just so that we can kind of come back to them and revisit them all properly at the end. And I think that's really good. We needed to touch on kind of where the market's at. I think like in the Q&A after, we'll go back into it. We could show some technicals and different things as well, but let's jump into this one now, because there's a bit of content to cover here. So can everyone see the screen? Yeah.
Yep, I can.
Yeah. Okay.
Yes,
so just a little introduction from my side for any of the Terra community that don't know who I am. So my name's Kevin. I'm obviously the host of this and helped pull this Yield Labs thing together with the panel here. I was formerly in the British Army as a telecommunications engineer, basically working on tactical communications, satellite radio, and all different things. And then I went into the oil and gas sector, helping energy companies basically connect their platforms all over the world in a lot of dangerous places. I did that for about 13 years, and then I basically retired from that job in 2019, before the crypto bull run, but I'd already built a strong crypto portfolio. I kind of knew where crypto was going. I'd been in it since 2017 and just basically spent all day at work because I'd built a functioning team, and I was kind of managing the region, just researching crypto, and I was just kind of, this is where I want to spend my time. So yeah, I've been full-time crypto ever since 2019, and used the tools and techniques to kind of facilitate my my income now. And we basically did a lot of work with Celsius when that first came out, because that was kind of the only offering that we really wanted to recommend. And we think the category's grown broader now, and there's more to talk about. So we kind of founded the Yield Lab concept to basically bring the highest quality yield generation content and education, and just everything that we can deliver to you guys in 2021. So you're early into this this project. So let's jump into this Terra network. We wanted to do this presentation just because there's a lot of confusion. There's a lot of complexities. There is a lot going on with this ecosystem. There's a lot of projects that people are confusing. Is it on Terra? Is it on Ethereum? Where's the coins? How do I get the coins? Et cetera, et cetera. So we're just going to do a very high level overview of kind of what Terra is, how it works, and yeah, just try and break it down into component parts, and then we're going to build on it in following presentations. So next week, next community call, we'll talk about in depth one of the applications that we can really dive in, get guests from the developers and different things. But we will just give this overview to start with. So, what is Terra? It's basically a suite of DeFi products on its own network. It has savings, investments, payments, and transfers, and loan functionality, and yeah, it's a full suite of products, which is really trying to bridge the gap between traditional finance and decentralized finance. So it is decentralized and completely permissionless. It offers a lot of the functionality of the centralized plays, but in a permissionless way. So anybody can access this anywhere in the world. You don't have to have a bank account. All you have to do is have a wallet, which you can download for free, and then interact as you wish if you can get exposure to the crypto assets. So it's community owned and governed, and fully transparent, and all of the data is there for everyone to look at on the growth side. So it has its own token, which is Lunar. If you look on CoinMarketCap, it says Terra, so it's kind of Terra Lunar. It's sometimes called, but the ticker for the token is Lunar. So obviously the lifeblood of the system, very much like Ethereum, where that's it, the lifeblood of the network. It's used for interacting with the network, and we're going to come onto the Lunar token a bit more in the other slides. There's a native stablecoin with this network called UST. So that's obviously a Terra asset, but it can be wrapped on the Ethereum network as well. And this is a decentralized stablecoin that isn't collateralized like a traditional stablecoin. So there is no capital behind kind of supporting it one-to-one as something like USDC or something like that. So there's a big difference in the kind of structure of the stablecoin, and the incentivization of kind of how it's designed using the Lunar token is kind of how it maintains its peg. And obviously it's an Ethereum alternative, and yeah, it's great to have different chains, cheap transactions, and just options basically. And there's lots of bridges and different things kind of built in between, so we can kind of interact between the networks. So let's just jump into first of all, the stablecoin. Kind of what is it? How does it work? So it is an algorithmic stablecoin, which is decentralized and permissionless. So when we kind of look at traditional threats to stablecoins, i.e. governments, saying that stablecoin is not allowed to be used anymore, this is a hedge against regulation effectively, and it's just completely permissionless, and it'd be almost impossible to shut it down. So one USD UST is minted every time every time that happens, $1 of Lunar is the reserve asset is burned. So obviously the more UST that's put into supply, that kind of puts buy pressure or increased price pressure on the Lunar asset. And that peg and that mechanism is basically one of the key functions, which basically is called seigniorage, where that burning mechanism happens, and that's how via arbitrage the peg is maintained. So if we ever see the peg trading one side or the other, the traders or arbitrage or market makers are incentivized to kind of bring the peg the other way, because they can profit off that transaction. So it's really cool how kind of through the algorithm and through arbitrage and through incentivization that you can effectively maintain a peg. There is insurance available on the peg as well for I can't remember the name of I think it was, we'll share that at the end anyway. There's basically an insurance available on the peg if you'd like to take that. And I think for the 0.6, based on some of the rates that you can get, it might be a wise choice. It's not something I do personally, but it's there as an option. It's very liquid on various dexes and centralized exchange, and it's in high demand at the moment. So, and obviously once you have the UST asset, you can make decent yields via the Anchor protocol, which we're going to come on further. So Kevin, you got anything else you wanted to say about UST just before I kind of move on to the next one?
Yeah, maybe the only thing, I mean, one of the key things is the entire Terra ecosystem is built around this UST. So it's not just a stable coin to kind of like have a stable coin. It's actually every application that is built on the Terra Luna ecosystem and blockchain is actually to increase the usage of the different stable coins, because there is not only one, there's the UST, but there's actually a bunch of other for different countries. And so every application that is built on the top of the ecosystem is to increase the usage of these stable coins. And the higher the market cap of these stable coins, the higher the Lunar token price, basically. And so if you understand that it's the only algorithmic stable coin that is actually working, all the others, they failed, but they never maintained peg. The main reason is because there was not an economy built around this stablecoin, whereas here they started the entire thing with what they call the Chai payments
payment gateway
system.
Yeah.
I mean, I think Kevin is going to talk about that a bit later. But basically, an algorithmic stablecoin is the only way to have a purely decentralized stablecoin, which is absolutely key. When we see what's happening with the other stablecoin and how basically the governments are trying to kind of stop those stablecoins right now, and so basically then if you look at the market cap, which is 2 billion, and you look at the overall market cap of all the stablecoins, which is about 100 billion, you just see how much this only algorithm, this fully decentralized and algorithmic stablecoin is still small compared to the rest, and just diving into this ecosystem, not only for the amazing yield that you can find on Anchor, which is around 20%, but also just as a kind of hedge. You want to say, okay, like now, if I want to hedge myself against kind of government regulations around the stable coins, I can actually buy the Lunar token and have a look at what's going on in this ecosystem, because the potential of growth is just huge, because it's just still so small, basically, compared to or where we could reach.
Yeah, and I think I wrote this slide deck about a week ago, 10 days ago, and it's already out of date because the demand on UST has just gone through the roof. I was trying to acquire some like 5-6 days ago, and literally the pools are drained on Uniswap, and there was like 7% slippage. So that, and then also on some of the centralized exchanges, there was huge kind of accumulation of the UST. So there has been a difficulty kind of acquiring large chunks of it without slippage. So you can see that that's just driving adoption, and that's why the Lunar price has gone up. So yeah, I think they're all good points, and this is a great topic in itself. But let's move through. We'll come back and any questions anybody has. So it'd be good if somebody from the team can kind of just update the market cap on UST, because I think it's gone up significantly since I put this slide together. So I think it's in the top 5 now of stable coins. So as Kevin said, there's a relationship between the UST and the Lunar token. So it is the Lunar is the lifeblood of the ecosystem, because it helps to maintain the peg via the arbitrage mechanism. There's a great video as well. I'm going to get the link somewhere and put that at the end when I finished. I'll put that in the chat and in the bottom of the video, where it basically shows via a graphic the kind of the mint and burn process and how that kind of helps how Lunar kind of facilitates that as well. Also, the Lunar is used for obviously the validators and delegators in the network via staking of Lunar, and the rewards for staking are kind of gas fees, as in the traditional Ethereum gas fees, network transactions, the stability fees, and the seigniorage, which is basically the word for the swap, the UST mint process. Effectively, that's what they call it, seigniorage. It's not a word that I've kind of come across before, but I'm not sure it's one that they made up or it's a proper word. But that's basically the process of minting UST, and that creates a burn pressure on the Lunar token. and also the governance as well. There's plenty of pools, and if you download the Terra Station, which we'll come on to in a minute, you can look at the various pools, what their kind of incentivifications are, how the governance proposals, etc. So many uses for the Lunar Token. I think, just to summarize, I think the most important kind of takeaway from the Yield Labs perspective is basically by owning the Lunar Token, you're collecting revenue effectively through all of these different streams, and part of the next network transactions are basically for holding the Lunar Token. So that's very important. So let me look at some of the applications on the Terra ecosystem. So first one we're gonna look at three. First one is Mirror Finance. Some of you all have heard of this. So basically, what Mirror is the creation of synthetic assets. So you can gain real world exposure to kind of equities, and there's going to be a whole, so Google stock, etc. So you're going to be able to, in the future, anything is going to be able to be tokenized, and kind of Mirror Finance is a platform where you're going to be able to gain exposure to these traditional assets. So I think it's important to mention that kind of when you're taking exposure to these assets by Mirror, you're not actually owning the asset, you're just taking a price exposure to that. So that's really cool. Kevin, have you got anything you want to say on Mirror before I go through these slides? Have you used it personally yourself?
Yeah, I've used it a bit. I mean, to keep it very simple, the really interesting thing here is you can actually kind of earn yield on stocks. So you don't have to, I mean, it's a synthetic way to get exposure to stocks, yes. But if you think just about the pure yield side, which is what we're kind of doing here, you can actually see the improvement, the huge improvement between crypto and the traditional world, where your stocks in your traditional world, they're owned by basically your broker or your bank or Robinhood, and behind that, they're doing what we call security lending. So they're actually lending out your stocks to institutions and earning quite a lot of money for that, and giving you zero. Whereas here you can directly kind of bypass all of that and earn yield, and even now even more, because you have some incentivized yield if you provide liquidity. But if you think a bit further, like this is the kind of next steps for people who want to earn yield on their other assets than just their crypto. You actually have a way here to get an exposure to stocks and earn yield, which is pretty cool.
Yeah, it's really cool, and it kind of does bridge that gap, and that's kind of what its purpose is. I think, yeah, and kind of tokenized real estate and all these things that do come down the pipe eventually, when kind of standards are set, are going to easily drop into this platform. I think from a regulation standpoint, this is probably one that the regulators won't like. I don't kind of know how they could regulate this or what they could do. I don't think there's a whole lot, to be honest, because of the nature of kind of the way this is built. But this is, it's just worth touching on. The regulators probably won't like there's exposure to traditional assets in a decentralized manner. But it's a fascinating platform. There's ways to earn. They have their own token, and you can participate in governance, liquidity provision, incentives, and there's lots of ways to earn the Mirror token and stake the Mirror token. So really cool. I think there's been a lot of confusion around kind of, is Mirror a standalone platform, chain or whatever. So that's what we're trying to do in this presentation, just break down the component parts and then just give that understanding. So yeah, it's really cool. So they also have a TryPay gateway, and as you can see as we go through this presentation, that basically, as Kevin said, it's very the way that kind of the Terra ecosystem is built is basically solving all the pain points for traditional kind of payments and onboarding and exposures to different asset classes. And there's really like kind of a modular system, and we'll see in some of the end slides kind of what that looks like together from a whole perspective. But they have a TryPay gateway built into the platform, which already has a ton of real world exposure, more than 2 million active users. I'm sure every time I pull the slides here together, the slides are outdated within a week, and 1.2 So I'm sure that's increased already. 1.2 billion annualized transactions after only 16 months of operation, which is pretty crazy. So this in itself is a really valuable business, and to have this plugged into the Terra Terra ecosystem is really cool. And you can kind of see how things will be built out in the future, and how kind of the user experience and building businesses on top of Terra will be very easy for people to do. Also, there's meme pay as well. A lot of these gateways and payment gateways are kind of Asia centric, and there's a lot of people using this in Mongolia and different countries as well. So it's really cool how the adoption of these platforms and gateways is really taking off. So we've touched a lot on this in kind of our Telegram group and on Twitter and different things. So Anchor Protocol is kind of the savings element of Terra, and it basically is a very simple platform where you're basically able to deposit UST and earn a fixed rate of around approximately 20%. It's been around 19.4, 19.5, 19.6 for the last several months. And it's just a simple tool that you can basically deposit and earn in-kind UST. You can borrow, and there's a governance feature on there too. And the borrowing is incentivized as well. No minimums, no lockups, pure DeFi and real-time rewards. So this is a very attractive proposition for people to kind of take traditional money and just earn 19 point whatever it is, 19.5, 20% on your money, very simply. So have you got any comments on Anchor, Kevin? We know we're going to dive into this one deeper as we go across the weeks, and we're going to get guests on and different things to talk about this one specifically. But it's this is definitely something that we've used personally, and we really like this protocol.
Yeah, not much. It's incredible. Like if you understand how it's working, actually, the most important is to kind of build confidence into it. But if you understand how it works, you would build confidence very quickly. And I don't think we have much to say now, because we'll dive deeper into this in the next few weeks, and hopefully have some nice guests.
Yeah, that's it. We're going to get some guests from these some of these devs and different people, these project leaders, and really dive into these. But we just want to give this holistic this overview. So how do we interact with kind of these applications and functions? Basically, if you download the Terra Station, they have a Chrome extension and a desktop application. Both the Chrome extension is obviously just like a MetaMask wallet, and then the desktop application is a bit more in depth. You can see it in the bottom right hand corner. It has a very intuitive UX UI, nice user experience. It's very polished. A lot of functionality in there, a lot of different tabs. You can see the history, what the staking tab. It's very in depth, all the different pools. Governance has in-app swap feature, very strong feature set, and a lot of the kind of platform metrics data in there as well on the dashboard. So we're going to start bringing these and breaking this down and just presenting it nicely on our kind of our social channels. So that's something to watch out for. But you can see with all of these things, they're very well thought out. They kind of, all the pain points have been addressed, nice polished products, nice delivery, and it's just very easy to kind of download these applications and just interact in a trustless manner on this network. Obviously, just make sure when you're downloading these things, you download them from the correct links and you don't click any spam or spoofing links. So obviously, we've mentioned it before, but I see a lot of confusion on this one. Terra isn't on the Ethereum chain. So how do we interact with, how do we go from Ethereum USDC, for example, to UST? We have to use Terra Bridge. Again, very easy to use. If you just go on bridge.terra.money, you can just change the tabs on the right hand side and make sure and swap assets cross chain. You can take wrapped UST, so on the Ethereum network, and then just basically send that over to Terra, and then you've got a Terra asset. So there's a burn process there, and then the asset is transferred to your Terra wallet. So it sounds very intimidating. First time you do it, you want to try it with a small amount of money just to make sure you're doing it properly. And then, and they also have different chain interactions with Binance Smart Chain and Harmony as well. So just be careful. Make sure you click on the correct link, bridge.terra.money. Don't type that in manually yourself into the browser, opposed to clicking on anything on Google that might be a spam address. But that's how you basically bridge across the networks. It's very easy, although it does seem daunting in your mind the first time you do it. So kind of what's coming next? We've touched on some of the key applications on the network already. Obviously, there's a huge pipeline of future development. So Orion is what we are going to cover this very soon, which is basically a stablecoin bank. So when you use Anchor, you have to use the UST asset. Orion is going to make that a lot more simple, and you're going to be able to use the native stablecoin of your choice, USDT or USDC or whatever you want to use, and basically interact with the Orion platform, and then earn probably best in class yields. To be honest, you can see in the bottom right hand corner some of the proposed rates that you're going to be able to earn, which are very attractive. 20% in kind, 25% in Orion. These are on stable coins. These are crazy yields, and for as long as they last. And that's what we want to kind of bring to our community, these opportunities, and make sure that that we kind of get some of the guests on and make sure we go through this fully and try them out ourselves. And yeah, these are just huge opportunities to earn yield, and some very more stuff coming down the pipe too. So obviously, if you stake Lunar, you get exposure to kind of all the airdrops on the network. So if you go on terradrops.io, again, be careful with the wrong links, because I don't think this one is. This was kind of somebody else that's developed this interface. I don't think it was the Terra team. I think it was a private developer. So use it with caution, but you're basically able to connect your Terra wallet, and then you can work out which airdrops you're able to claim, and it kind of updates in real time, and you can just click the claim button and then they drop into your wallet. So that's a really cool little platform, little project that somebody's made too, so you can check that one out. And as you can see, kind of anything that new that comes onto this network, you would gain exposure to that, and be if you had stake Lunar, and basically be able to claim those tokens. So you can see Orion's come in, Loop Finance, Spa, lots of different things. It's all updated in real time, so you can basically just have a look and see if staking Lunar is something that you wanted to do. So let's have a look at the project funding. So I think it's very important when we're looking at these platforms, basically where is the funding coming from, what is the roadmap, who are the developers, and what is going on. So Terraform Labs is effectively a company where they don't particularly make any profit. It's just kind of a company structure where they basically stimulate development on the network, and they basically strategize kind of next steps and what they want to do. Yeah, so it's heavily funded. They've just recently closed a $150 million funding round from all the big names, Pantera, Capital, Digital, Galaxy Digital Capital, etc., etc. There's lots of press releases about this. They're very well funded. I think obviously they're a centralized component of this network, and I think their mission is to kind of stimulate development to a point and then kind of close the entity and disappear to a certain extent. So it's obviously, I don't think it's not a for-profit company. I think they're all on minimum wage there, and they're just basically stimulating network growth to a point where that takes care of itself. So the founders, Do Kwon, former Microsoft employee, it's absolutely amazing. I really encourage you to kind of just, I could have written a whole slides on this guy. It's what he's done and the kind of ways, the vision he has for this platform and the way he's kind of put it together, and really like business mindset, if you like, and kind of how he would execute is amazing. There's tons of interviews online. Just Google him or type it into YouTube, and his partner, his co-founder Daniel Shin as well. So Kevin, you got any just comments on these two, especially Do, because I know you enjoy his content?
I mean, how many slides are there left? Because I wanted to say a few things, but like I might just let
about 3 or 4
presentations on it.
About 3 or 4.
Yeah, I mean, probably if we just, I mean, the one of the key things you want to look at when you analyze a project is a bunch of things. The funding, as we saw before, like who is behind the project, you want to look at the founding team, and these guys they're incredible. Daniel Shin, he already built a bunch of businesses before, so he's like a seasoned entrepreneur, super successful. Do-Kwon, he's super brilliant. You just listen to a few of his interviews and you just realize that he's there. He doesn't care about the money. He even says in one of the interviews, you know, like when they ask him, what's the risk for Terra? He just says, listen, how could government, shut down a company that is doesn't exist, and a founder that doesn't care about money and doesn't care about ending up in jail. And so you just see the level of dedication of the guys. It's absolutely incredible. And then if you add on the top, as I was saying before with Ethereum, it's all about narratives. And so there is actually probably Luna is going to be one of the big narratives in the next couple of months, because they have a bunch of things happening. There's a protocol upgrade called Columbus 5. And then if you understand, which Kevin already mentioned before about these airdrops, but maybe to be more clear, when you buy Luna and you stake it on the Terra station, you have access to two kinds of different airdrops. Every time there is a new project on the top of the ecosystem, you get a weekly airdrop for the first 1 or 2 years of the project. And in addition, every time there's a new project, you get a Genesis airdrop, which is a one-time airdrop. So basically, if you buy some Luna tokens and you stake them, and then you understand that, yes, for the moment, there is 2 or 3 projects on the top of the ecosystem, but there is a bunch in the pipeline. And actually, there is quite a lot of projects. I believe it's about 50 or 60 that are waiting for this Columbus 5 upgrade to be done. Then basically you understand that you can get in really early in Luna, stake it, and then basically collect all the Genesis airdrop for all these future projects. And the last thing I would maybe say is, as a kind of investment thesis, the really important thing is you can compare you can look at the number of users of the Terra ecosystem, which is about, I think, 2.8 million. I don't remember if it's daily or monthly. And you compare it to Uniswap, which is about 2.3 or 2.4. And then you can compare the market cap of the Luna token and Uniswap, and you'll see that the Luna token is actually smaller, or much smaller. And if you put all this stuff together with the narrative of the protocol upgrade, all these new projects that are going on the top, all these new airdrops, both Genesis and weekly for the first 2 years, and all that stuff together, you have pretty much all the ingredients for some explosive growth, potentially, if Bitcoin doesn't kill the entire market in the next few months.
Yeah. So yeah, we have the go and look at Do-Kwon, like go and listen to kind of how his vision of kind of how he's built this. Like I've learned a hell of a lot just from listening. He's probably my favorite at the moment, and just listening to all of his content on repeat. It's amazing. And like you said, the Columbus 5 is coming, which is a mainnet upgrade, and it should be here, maybe Q3. Obviously with software, it always slips, so Q3, Q4 probably. A lot of updates, and the seigniorage distribution model is definitely redesigned, so that will add more buy pressure to Luna. Basically, everything is adding buy pressure to Luna. The more people that pile into the network in terms of UST and savings, that adds pressure. So from all angles, there's a lot of other Solana upgrades and different things, and we can talk about some of those in the questions at the end. But it's all positive, and kind of just the rate of development is just crazy on this network. So if we look at kind of a couple more slides before we wrap this up, and we kind of look at like real world applications. This is a really interesting one, the Cash, which is you can go on the website cash.io, where they basically build a company on top of this, offering traditional clients just access to kind of whatever it is, 15%, I think it's 15% they offer savings. So basically they do all the work for you. They put a nice wrapper on the front of it and a nice dashboard. They have card products, and they're building all this company out. It's an American company, so they're going to offer this out to just to normies and traditional investors. So this is really cool. They can see that they kind of built exposure via Mirror to traditional assets. They've built using Anchor as a savings platform. They're going to build card products on top with their payment gateways and et cetera, et cetera. So we're kind of looking at these things individually as just the back end products, but there will be a lot of front end applications kind of that nobody even knows that the kind of Anchor and Terra ecosystem is being used in the background, just as we don't kind of really understand what is going when we just swipe our card. We don't really understand what which payment providers in the middle. So this is really cool. Go and check this one out, and they have a really good this is a large company building this as well. I think they're part of the Terra Bridge group, and it's really cool just to see that the capital is obviously going to flow in at quite a fast rate. So in terms of opportunity, we can talk later in the Q&A about kind of undervalued network and the asset prices and potential. So there's a ton of, as we've touched on, a ton of development potential in terms of the 50 new products that are already in the pipeline. There's real world adoption. Just since, like I mentioned at the start, since I wrote this presentation, the amount I don't have the figures to hand. I'm sure one of the team can grab them now, but the amount of UST being kind of purchased and deposited into Anchor has gone up significantly, especially I think that the Celsius are going to be using them. And I think a lot of the other centralized solutions is the obvious place for them to park stables. So anyone that's offering yield generation, they're just basically going to use this as a lot of the backbone of kind of, stablecoin yield generation. It's just a no-brainer. So it's extremely low friction, and everything's really, polished and easy to use, and a well-funded platform. So with the leadership team and what they've achieved so far, and the fact that nobody is really kind of talking about this too much, it's top 50 or maybe top 50 plus now in terms of market cap. But I just think this is such the understanding on the network, just because of the complexity of all the different components. That's why we tried to break it down today for you. People don't really understand what's going on here, how it's going to grow. Those who get it really get it. The rest of people are kind of just scratching their head. What's Mirror? What's Anchor? How is it all linked? So I think there's a huge opportunity in terms of just capital inflows and adoption into this network. And then obviously the Lunar price is probably, is correlated to that. So there's a potential via staking rewards, there's just so many potentials for kind of just investment kind of growth. But obviously everything that we say is not financial advice. So just finally, just to summarize before we dive into some questions, I think this graphic is pretty cool. You can kind of just see how Lunar's centric to everything, kind of stable coins, derivatives, asset management, money market. Everything is kind of banking and payment gateways. Everything is kind of centralized around Lunar. So as long as the adoption continues to grow and the ecosystem continues to flourish, then obviously the price should appreciate on the token as well, and the token should be in demand. So it's, as we mentioned, permissionless. Anybody can use this all across the globe. I think some of the centralized solutions have been great for us who can access them, but I think as they kind of gain more success and more traction, I think they're going to have more regulation, and certain areas such as the UK have just been shut down. So people in the UK who can't use centralized solutions, that's, they need an alternative. So I think we have to bring well-rounded alternatives and opinions. We can't just say, oh, if you can't use that, that's unlucky, you're out. So I think the permissionless nature of these platforms is very intriguing. And basically it's just a full suite. So I think that this graphic's really cool, that it just shows what's been built so far, what's going to be airdroppable, what has been airdropped. And I don't want to go through the whole thing, but it's just kind of a demonstration of kind of what has been achieved, what's being built. And there's a lot of different stablecoin options. There's a lot of on and off ramps, and some familiar companies and integrations, as you see. So anyone's welcome to watch this back after. You can go find the graphic online. It's quite easy to find, but this is just basically the ecosystem as a whole, everything that's been achieved, and it's going to grow significantly in the future. So I think, that's Terra overview. I don't know what that was, like 40 minutes, maybe 45 minutes, very, very high level, not in depth in any way. We're going to dive deeper into these things individually as we go on through the weeks. And I think it's just a great opportunity to generate yield in a permissionless way, stake, buy Lunar, and it has a strong buy Lunar if that's something, you know, that aligns with your investment thesis and you want to yield that way. As again, nothing we've said is financial advice. It's a great addition and platform to the DeFi space, and it has a strong alignment and kind of what we're trying to achieve at Yield Labs in terms of recommending solid projects that can, you know, basically create passive income streams for you if that's what you choose to do. So you can find me personally, if you enjoyed the presentation, just on I'm on Twitter at crypto_flipping. I've got a personal website, Yield Labs address there, and the personal address as well. And I've got a couple of Medium articles just on yield generation as well. And you can find us on all of these channels here. So obviously Twitter, Telegram, we've got a great group where there's a lot of positive discussion in there. It's really high quality group, no kind of silly talk, and it's a nice manageable size as well at the moment. So we can, I think we've got 500 or 600 people in there at the moment. So it's really nice. We've got our own YouTube channel where this recording will be published, and we're going to have a website too. So we do these calls every 2 weeks. We're going to do a lot of other content as well. And thanks very much for listening to that presentation. And let's jump into some questions. I think let's give the panelists some comments first, just on how they see it, and then we'll jump into the Q&A via Toby.
Yeah, I'll just add one thing, because I can't stay too long. I'm going to say another 5 to 10 minutes because I have to wake up early tomorrow, and it's like 1:10 in the morning. But one of the really, I mean, again, if we want to kind of think about the investment case for Luna and the entire ecosystem and the tokens on the top, you want to look at what the smartest people in the industry are doing. And actually, there's a bunch of guys called Delphi Digital, who basically are the guys who designed the tokenomics of Axie Infinity, which we also, what the price did in the last couple of weeks. And they also participated in actually most of the most successful projects, so Aave and a bunch of others. And so they're mega bullish on the entire Luna and Terra Luna ecosystem, and they're actually advisors and liquidity providers, and actually helping most of these projects on the top of the protocol to design the tokenomics. So when you understand that, basically you can get there, I mean, earlier than the majority, and you understand that even the tokenomics, I mean, which is one of the most important things when you're thinking about investing, are designed in a very specific way, in a very smart way, by some teams that just proved, you know, repetitively that they were super successful in terms of designing those tokenomics and actually participating in some super successful projects. So I think with that, plus what we've shown today, you have the kind of overall understanding that there is a, I mean, I'd say this ecosystem has a lot on its side to be super successful in the medium to long term.
Yeah, I think that's, it's like I said, a very basic overview of kind of what's going on. It's super in depth, but I think that's just to get that out there, and then people can kind of reference back as we go. So do you want to jump into some Q&As, Toby, while we got Kevin on, just quickly? We'll just keep it on this topic for now, and then we'll kind of close the recording once we clear the Q&As out, and then we can just kind of do anything after that.
Basically, the first question that we have, and this is a question that I see recurring really, really often, is can you stake UST on Anchor but not Luna?
Yeah, I'll take it. Yeah, I'll take it. So actually, you can absolutely, you can just buy some UST. So either you use the kind of DeFi way where you go on Uniswap, and then you get your wrapped UST, and then you need to use this bridge to actually convert this wrapped UST into kind of Terra-based UST. Or the other thing you can do is you go on KuCoin, so it's a centralized exchange. You send some USDT, you buy the UST for USDT, and then they're directly converted into the real UST, you send them to your Terra station, and then you just connect them to the Anchor protocol and you start earning, and you absolutely don't need to get any exposure to the Lunar token in order to earn 20% on your dollars.
Yeah, that's what's crazy, right? Like you don't have to buy the token to get that. And there's no like, oh, you have to buy X amount of this and that and stake it and lock it and all these other things. I think that's why it's so cool. Yeah, I think the barrier to entry is kind of getting the UST, and a lot of people, there is sometimes a bit of slippage with that, but when you're earning 20%, you get it back in like 3 days. So it's kind of, you know, everything else is on top is profit. So that's kind of the test. And you're right, you don't have to have the Luna just to get that extra, that 20% yield. So that's really cool. Hope that answers that one.
And that's what makes it powerful, right? Is that, you know, we've seen this before. We've seen these high yielding products. We've seen these interest rates that you can take and achieve, but they're always paired to, you can get the high interest rate, but you've got to own our native token too. So this is a breath of fresh air where you don't have to. You just plop it in there and you're good to go. It's simple as that.
I think as we go along as well, it'll be a lot more kind of card integration or off-ramp integration or just ease. I think this is just like the beginning, and there will be some dilution, I think, as the platform grows. Like it's inevitable, but the whole point of it is to kind of incentivize it as a savings platform in the ecosystem. And I think these rates are going to remain for a while.
Okay, so for the next question, thank you guys. Next question, and I see that you're next in the queue, but I'm going to come back to you in a minute because that is a bit more of a generalized one. So there's way too many opportunities: BTC, ETH, Cell, Luna, etc. How do you decide? Not financial advice. Is Luna a big one for you personally, similar to ETH or Cell, or not?
I'll answer it if you want. Yeah, I think both answer it. So yeah, I think anything. It's not. It depends. Like, it depends on portfolio size. It's impossible to ask. Everyone's going to answer a different question. Is it a big one? So in terms of my portfolio, no. But would I allocate value to it? Yeah, I would. But that depends on my portfolio size compared to yours, right? So let's say someone with a $10 million portfolio and they allocate 500K or 100K, that's not much for them, right? So, but that's still actually a lot of money. So would I allocate value to it? Yeah, absolutely. I'm not a financial advisor. I'm not telling anyone else what to do, but anything that's high yielding or has a yielding component and then has, you know, obviously some upside as well, then it's sort of everything in my portfolio is a yielding. It has to be yielding, otherwise I'm not interested. And then kind of, I'm obviously interested in the ecosystem as a whole. I think it's still early for this ecosystem. So I think it's a great opportunity. Yeah. Kevin or anybody else, free to give your perspective on it.
Yeah, maybe it's the last question I'll answer before leaving. But I mean, for me, it's definitely, I wouldn't say the biggest one, but it's definitely an interesting one. I own Luna tokens. And I mean, again, as I said before, like you look at the team, if there is everything, there isn't anything that I mean, most of the project, you know, like you don't really know what the team are, or there is problems, or you can just, you know, there is always something. Whereas when you look at these guys, you just look at the founding team, you look at the funding, you look at the actual execution, which is stellar. Like it's just brilliant. Everything just works. The UI you just need to use these protocols. And when you use them, the kind of mistake I was doing before is I was, you know, very kind of Ethereum centric. I mean, also in Polkadot and a few other things, but there is nothing concrete to be using yet. So I was really in yield Ethereum, and then I started to use this stuff, and this is just incredible. And at the end of the day, as we all know, no one cares what the backend is, and there is zero loyalty in terms of I prefer Ethereum or I prefer something else. You just want to go where the best user interface and user experience are, and actually where the best yields are, and that's all happening there now. And then there is all these bridges being built with this Orion protocol, and then you have all these. Just think that all these additional apps, and you know, I think in multiple countries in Europe, in North America, And in different places, they have this kind of like fintech, companies either integrating the underlying Anchor protocol. So when people will deposit dollar or euro, whatever, this will be converted into UST in the backend. No one will see, and this will actually grow massively the demand of UST, because it's this asset that you need in order to earn this 20% yield. And if you can look at the end of the day, any company that works really well is based on a very simple. You need to have everything working well. You have to have a great team, etc. But the concept must be really simple. And here, the concept, this stable coin that is algorithmic, that is the only one that is working, and on which, as a first use case, you can earn 20%. And if you understand how it works, it's actually pretty sustainable, because it's funded not only by the borrowing side, like most of the DeFi market, but also by the fact that the borrowers, they need to stake, they need to use a collateral when they borrow money. There is actually a proof of stake asset, such as Luna, where you can earn 13%, or very soon Ethereum, etc. And then if you understand that the borrower, they need to over collateralize the amount they borrow, basically, which means they need to lock into the protocol Luna or Ethereum in an over collateralized fashion. So basically, I mean, we'll dive into this in the next couple of weeks, but it makes the entire 20% actually pretty sustainable until the protocol themselves, Luna, Ethereum, etc., lower themselves these proof of stake rewards. And again, the entire thing is very simple. Except to get the UST, is very simple to use, and it's just incredible. 20% on your dollar. I mean, it's incredible. And it just works, and it's just been proven to work in the even in the last crash that happened 2 months ago. And so it's very simple, but everybody needs yield. So it's just pretty much a no-brainer.
Yeah, and Toby's made some tutorials already. I see a few people asking how to get all the UST, what's the difference. So just go to the YouTube channel. It's just linked in all our socials, and we'll put a link there for you. And you can go and look and just follow that tutorial. And it basically goes through it click by click, where to get it from Ethereum into the Terra ecosystem. So just do it with $50 to start with. Obviously, when the gas fees are crazy, then that's annoying. But just start with, assign some money to education, and then just use that, and then just go and borrow, and just effectively you can just lose that money and use that as educational money, and it'll be a great, however much of an amount that you're willing to assign to that, and then just getting comfortable to the ecosystem before you kind of transfer larger amounts, if that's something that you want to do.
Just before you move on, I'm just gonna head out, so looking forward for the next one.
Sure. Thank you very much.
Yeah, see you soon. See you soon, guys.
Yeah. Thank you very much, Kevin.
Take care,
It's been
Kevin.
great to have you on this time. Thank you.
Take care, Kevin.
All right, so let's do a couple more questions, and then we'll just close the recording, and then we'll do some after show commentary.
Yeah, no worries. It's quiet on the questions today, guys. If you have a question, don't be afraid to ask. There's no stupid questions. If it's something super basic, then please don't be afraid to ask. We'll do our best to help you guys that you may or may not have. So a question from Yusuf: what is the relationship between ERC20 UST and Terra UST? Is it a burn and mint process when you send UST through bridging between blockchains, or is there a fixed supply of coins for each?
Yeah, so this basically, what's the relationship? It's just the relationship is access on one chain and just bridging across. So you can buy with USDC, you can go via Uniswap or a centralized exchange into UST wrapped WUST, and then send across the bridge, and then it becomes UST Terra, if you like, proper UST. So there is a burn process, and then when you do the transaction, you'll see it comes up as a burn. It's a cheap transaction to do the burn. I think it's it's not like a swap. It costs it's cheaper. and then you're on that other side, and then you can kind of repeat the process on the way back. And I think Orion's going to be very cool, because we're basically going to be able to deposit stable coins straight into that. Orion is not live yet, but we're going to basically, bring the Orion team on, and we're going to dive into that one. So there's going to be multiple options. Use USD, don't use USD, use stable coins, traditional ones, via Orion. There's lots of different things, but we wanted to start at the basics. So that's the relationship. That's how you move across. And watch the tutorials, and just add comments. If you need anything else, add the comments and we'll produce that.
It's the same with the wrapping and the burning and so on. Is when you go into Anchor, you'll get a UST. If you take out a loan on Anchor, you'll see that you get Anchor UST to use as collateral.
Yeah, that's it. You get that token, that deposit token, if you like, AUST, and then that's in your wallet there.
So thank you for that, Yusuf. I hope that answers your question. Next question from Jem. She is asking about if you don't have a position in Terra Lunar at all and you have 1K fiat, how do you get started step by step? Now, I'm assuming that is to go ahead and start afresh from zero. We have tutorials on that, as Kevin said, on our YouTube channel. If you're asking if that is a good place to park some money, then I think we've discussed in great length that we think that that's a good spot to do that right now, especially if you're going to be yielding on stables.
Yeah, it's up to them to do. It's up to you to make your own decisions, but it's a decent platform. And take insurance if you're not sure about the platform or the peg. So the peg, it can be insured on UST, and it has deviated before, and it's recovered, which I think is important that it did recover, and understand how the relationship on the peg works, and then insure it if you're not sure, and then take insurance on Anchor overall if you want that as well for 2.7%. So yeah, it's up to you, your own financial decisions.
We've got the next one from Nav regarding Luna. It's had a massive pump recently. Do you fellas reckon we will see some pullback to the $11 to $12 range?
I need to check the chart. I'll do that.
Kev likes his TA.
Yeah, I need to check the chart, because do I expect it to pull back? It's all, to be honest with you, it's all dependent on Bitcoin, in my opinion. I know this is run counter to Bitcoin, and it's has its own forces, but you know, kind of where Lunar's trading is definitely pegged kind of from a market maker perspective, I would say, to Bitcoin. So if Bitcoin crashes, and it does create fear, and it will probably pull back. So will it pull back to the $11 to $12 range? Probably. That's not very far at all, is it?
It's been down to $13.20 whilst we've been on this call as a global average.
Yeah, so it's like there is that, so it's, you know.
Yeah, it's another 5% down again, right? And you know, we're not miles and miles and miles away from seeing those figures. Do we think that we can absolutely see them? Maybe. Just like Kev said, it's the market decides.
It's gone on a screaming run. It's gone on a 200% run in the last however many weeks, you know, a couple of months. So like, can it pull back? Everything can pull back. Will it? Probably. Will it go past 20 one day? Probably, almost certain. With kind of what's being built here and what's going on, and the forces on the token. But it's sort of like a long-term hold, like everything else. Do your own research, invest in what money you're willing to lose. And you know, I think that the price potential is crazy on this thing, but you know, it's nothing's easy. And yeah, just do your own enter where you're comfortable at entering in.
Okay, Nav, I hope that answers your question. Next one. Sorry, these are chopping around a little bit. Question from SW: how does an algorithmic stablecoin work, and why is that better than normal stablecoins?
So the main difference is it's not collateralized. So a traditional stablecoin, USDT, USDC. Did I just chop up there a bit? I think I'm back now.
Oh,
Yeah.
Calv, your audio just chopped.
Yeah, it was my connection. Sorry. I think it's okay now, yeah?
Yeah, go ahead, man.
Yeah. So the main difference is the collateralization, right? It's not, and this is what scares a lot of people, it's not collateralized. So there is no dollar behind that dollar. Behind that digital dollar, there is no dollar. So it's collateralized, but it's pegged via the incentivization system. So you have to understand that. Once this question is done, I'll find a video. You can go and watch it. It's 3 minutes long, and it'll tell you exactly how it's done. So you have to look and say, okay, am I comfortable with no collateral behind it? Or am I not? And do I want a mix and match approach? And most people want the mix and match, where they hold some of that as a hedge against a collateralized option. So a collateralized option has the dollars there, but what if the governments regulate that entity or whatever? So you have to just look at the risk on both sides, and the algorithmic version in terms of like over regulation and shutdown is very hard for the regulators to shut that down, and that's kind of why it's designed in that way. But obviously the other the collateralized options are a lot more regulator friendly, so someone's going to win the war. Maybe both people win the war. It's very easy to interchange between and to move around. You can use things like Curve and different things to kind of as Forex markets and to change in between in a decentralized manner. So in DG, USD, and all the other regulated offerings. So yeah, that's the main difference. There's no collateral behind it.
Yeah, and it's a true actual decentralized stable coin, right? Because DAI is compromised, not really compromised, maybe the best word, but DAI has, it has USDC and it has centralized stable coins behind it. So a lot of people think DAI is like a fully decentralized stable coin, but there's a huge difference between DAI and US, and the Lunar UST.
So someone's asking, is it any better? It's no, in terms of a function, does the peg waver a little bit? It wavers a bit more, but all the pegs have wavered on all the stable coins. Forex markets are whipping about up and down all the time. So it's pros and cons, and it's kind of understanding how things work, and then basically just picking, if you're more, some people can't access USDC and they can't on-ramp money through a US exchange. So what options do they have? Yeah, they could acquire that in different ways and things. So it's just basically understanding the different pros and cons, and I hold all of them. So probably in equal quantities, to be honest, not because I favor any one. I'm just comfortable with kind of what they are. And then if you're not comfortable with any of those, you can use like an M stable, which is backed by a basket of currency. So there's lots of different options. So I hope that just helps kind of what an algorithmic stable coin actually is.
And they all have. Yeah,
Sorry,
go ahead, Steve.
I was just going to say,
please.
it's probably worth adding understanding what the collateral that these stable coins are backed by actually is as well. And I know recently there's been articles with audit results as to what sort of USDC and USDT are actually backed by. I mean, I think USDC is like 61% cash to cash, and then there's like a 39% basket of other sort of assets through treasuries and bonds, effectively corporate debt. So just educate yourself really and understand what these coins are backed by, and the data is out there now to take a look at as well. So really useful to understand, and in terms of doing your own research, something to definitely take a look at.
Yeah, that's a really good point. Hope that answers the questions.
So moving on to the next one, for those unfortunate enough not to live in Singapore or Dubai, is there a tax CS fee download for airdrops, staking rewards, interest, etc.? So basically, this is a question around, I guess, it's an anonymous question, so I can't really get any more clarity on that. If you want to add more clarity, please stick your hand up and please feel free to join in the chat. But basically, airdrops happen frequently. Are they a taxable event? Quite probably. How do you monitor that? How do you monitor the staking rewards on top of that? the interest? How do you monitor, like, if you take like long positions on Mirror or short positions on Mirror and so on? What's the best way for you to keep a track of that? Kevin's answer: go move to Dubai.
Yeah, but that's not feasible for everyone, is it? Like that you can be tax efficient and avoid the things, but
exactly.
the question does say like he's not fortunate enough to do that, so that's fair enough, and probably doesn't want to do that either because he's probably got somewhere nicer to live. So there's like how you keep. There's lots of softwares you can use. Recap. You can there's another one.
Coinly is another one.
Coinly. There's another one as well that does DeFi, where you can basically plug it in and it just works it all out for you. So there's plenty of softwares. What's that one called? Crypto. There's my crypto tax or something else. So there's plenty of them. Just Google it and you'll find one, and make sure you just make sure it's legit. Check the reviews first, and then basically just it'll work a lot of this stuff out for you. You pay a subscription and then you just submit the 1099 or whatever it is that you want to, the tax that you owe on them transactions. And the thing is with a lot of this stuff is that a lot of the definitions region to region around taxes and kind of like what is taxable are very vague. So a lot of the time it is like you're playing a computer game with this stuff because you're getting rewards in different stuff. So is that taxable? Is it not taxable? I think things like Anchor and stuff are very clear, but like there's lots of other farms and different things like what. So it's the definitions are very hard, and you can probably get an accountant or somebody in your local area to really help you with that, a crypto professional to help you refine that. But I don't know where you're from, so it's hard for me to kind of pinpoint that one.
And it's all such gray areas now, right? So everything, I mean, for as long as time itself and jobs and tax has been a thing, tax has been largely open to interpretation, and a good accountant can do much better things for you than a bad accountant can, and you're still not necessarily breaking the law, you're just achieving your maximum tax potential. So it's important for you to ensure your own personal options in these regards. And it comes down to like where you live, if you're in the US, which state, and like also how much money you earn, because that's going to have an enormous impact on the tax brackets that you sit into, and then by association will have a big effect on the capital gains tax brackets or income and so on. So it's a very gray area. Be smart. Don't go spending all of your money and leave yourself with perhaps a tax bill that you can't pay and stuff like that. Just be wise, be smart, make sure you're doing the right things for yourself and your family or whoever else.
Let's do one more. And then we'll close the recording, and then we can just answer the rest. So if you've got any questions, type them there.
Okay. Is there a place you can see Genesis airdrops that you get from staking Luna? Is there a place to see when the Genesis airdrops you get from staking Luna will be released?
No, because you don't know when they're going to release, because we don't know when the devs are going to release them. So like you can just follow Terabytes is good. TerraDrops.io, like I referenced in the presentation, I don't think that's built by the Terra team, so be careful with that one, but it's definitely, I know it works because I tried it myself. So check those ones out, and they're really good.
Yeah, there's a bunch of websites. Just make sure.
But it's hard to keep. It's hard to keep on top of this stuff. Like the Luna staking Luna comes with risks as well. So you have a little 21-day lockup to get the tokens back out and different things. So understand everything. So before you kind of start just staking things like that. I think we'll leave I think we'll wrap the recording. So I guess we'll give the panelists a chance to say anything before we close, but I think it was a really good overview, and we're going to continue the Q&A once we just click the recording button off. So thank you to everyone for participating in the panel and the questions as well. So be sure to stay around. Have you got anything to say, Clancy or Steve or Toby, just before we close it out?
No, nothing on my end to add. No, I think it was a great overview. I know we're going to go a lot more in depth, like you mentioned, into each individual aspect of the project. But yeah, it's definitely one I'm really looking into, and I got a lot to learn still myself. But I'm going to be doing a deep dive along this process with everyone, and yeah, it's definitely one I got my eye on for sure.
Cool. And then Steve, what about
No,
socials? Anything on the social media channels coming up?
I don't think so on the socials front. The only thing I was going to add was someone talked about the market cap of UST before. It's 2 billion, and it's 850
Like
million.
almost half of it is in Anchor.
Yeah, 850 million deposited into Anchor, which the all-time high is like 886, which is over the last couple of days. So, you know, the growth is insane. If you just go on the Anchor protocol.com dashboard, you can see and track it, and we're tracking it as well with stats. So we'll get those stats out as well to track that and track the growth. It's really interesting to watch it improve and watch it grow. So yeah, watch that space, and we'll keep the stats updated for you.
Cool.
Thanks, Steve.
Same with the Lunar staking as well. Sorry, so you can see that in the wallet. So if you use the desktop version of the wallet, the dashboard in there gives you some really cool stats. Unlike CeFi, you know, you don't have to rely on the company giving them to you. They're just there every day. I think with 37% staked of the overall supply for Lunar. So again, one to watch, and gives you a really good sense of, you know, what's going on with people's Lunar, whether they're staking, unstaking, and good chance if people are unstaking, and they're probably selling it. So just metrics that are worth keeping an eye on if you're holding Lunar in terms of where you think it might go in the next, you know, in the coming sort of days, using those metrics to track.
I remember that this like Anchor, something that we've touched on a lot today, has been only around like this year, and it's almost got $1 billion locked up in its stable coins. It's insane.
Yeah, I think DAI is the next one. So UST is the 5th biggest, DAI is the 4th, and it's 5.5 to 6 billion. So a long way to go, but on its recent growth path, it'll soon going to catch up, I think. Just think what pressure that, you know, adds onto Lunar buy pressure. But
I think when these centralized entities get involved, which they probably all are, offering 9% or 8% on stable coins and then generating 20, you know, like, of course they're going to put a percentage in. We can do some analysis, and we'll find, I think we've got a lot of the wallets already of kind of what they're doing. So it'd be really good to track all this stuff as we go. And, you know, Celsius just announced the partnership. So what that partnership is, we're not sure, but I'm sure it's to generate yield and add liquidity to the platforms, because they do that on a lot of the DeFi stuff. So it's already good that these guys are, you know, announcing that they're using this stuff too, and a lot of real world companies using it as well. So cool. I think that's anything else to say, Toby, before we close?
No,
I think that's cool. We'll end the recording there. So thanks for joining, and we'll continue with the Q&A now.
Yeah, thanks, guys.